Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, November 21st. I'd like to say happy Thanksgiving to all of you and your loved ones. Hope everybody gets well-needed rest for the day. As for the markets, we're open all day today, and Friday we are open for a half a day on Friday. And we'll resume, obviously, on Monday for a full trading session. So let's talk about that for a moment. The first thing is seasonal tendencies. Today and Friday usually are up about, believe it or not, 1 to 1.5% on these 2 days combined. That's 62% of the time for the last 20 years. So that's a pretty good number that we might probably drift higher. And the reason why is that a lot of the major players are either gone or off the desk, and second and third tier traders are just kind of maintaining positions, watching things, just in case something comes out that doesn't happen and need to be reacted to. Other than that, when you have a slow day, volume tends to be light. And we favor the upside, that we actually drift higher into the close. Now, obviously, that could change pending some kind of bad news coming out. Last night, we did have an unresolution of Greece, so they did not resolve their issues, and they're going back to the drawing board. The futures did sell off about 7 handles early on, and then now have fully recovered and up $1. So that goes to tell you how the sentiment is kind of strong right now, and we have bullish sentiment. So where do we go from here? And we had a nice couple of days of a nice rally. We did get a consolidation yesterday. So really it was, believe it or not, it was 1 day of a big move, and then, of course, another follow-through, small follow-through day and consolidation day. The NYMO, the McClellan Oscillator, up at plus 71. We are not overbought, but we were extremely oversold. I mentioned that early on Friday, last Friday, and now we have rallied back up into this area here. So there are some areas where I think that the markets have maybe are due for a pullback is really a better word for it. And then that pullback would probably be bought into heavily and looking for that Santa Claus rally. So, and I do suspect the Santa Claus rally is actually should resume the trend for the last 20 years. We've always had mostly a Santa Claus rally starting right around the holiday season, right around this time, and going right into the first, second part of January. So that's something that I'm going to be watching and monitoring as we move on. But yesterday, very, very quiet. The day before that was also very quiet. And now we're going into this Wednesday, day before Thanksgiving, which should be even worse. Friday should be anemic as far as volume. And like I said, if you're long, stay long. Just watch your stops accordingly. And then we'll see what happens next week. But the markets, for me, I would like to see a little bit of a pullback to buy into. And I'll show you on the charts here. But let me just show you two indicators. Which one I haven't showed you yet was the Shanghai. Really haven't done much at all since October. We had a little bit of that bounce, rolled right into that resistance area, and then again sold off. Our ratio chart to the SPX is actually turning lower. So this really isn't helping the bull case. But this is something that we need to monitor, and we really need to watch what's going on in China. Because if China doesn't recover anytime soon, and possibly looking for that hard landing, then the markets might be in trouble here going into Q1. So this is something I don't think is going to affect us at this time, but this is something I like to continue to watch. Let's look at the dollar. Now, the dollar ran into resistance, as you know, and we did get a little bit of a pullback the last couple of days, and now we're above that 200-period moving average. So we're right in this area here, chopping around. I like to see the dollar pull back a little bit where the market rallies, but if anything, if we can get a little pop back up into resistance and we get a little bit of a pullback in the market, in equities, I'd like to see that. Then we can kind of buy some stock going into, again, the end of the year. And let me just show you here what we're looking at. As you can see, this is the 10-minute spiders, and I'd just like to show you where we are. We have an inside day from the previous day, and then, of course, we had that big gap up, and then we sold off for 2 days. 2 days of inside, gap up, 2 days, again, inside days, gap up, 2 days to the downside, 3 days consolidation. So, as you can see here, not much really going on. If you weren't short here and long here, day trading has been a little bit difficult as far as looking for setups and trying to find good setups that risk reward wise is going to reward you. Take a look at the daily chart of the SPX. And again, guys, really not much has happened. As you can see here, we had two big follow-through days, and we did close above the previous day, but ever so slightly here with with a small indecision candle. I think personally, and this is going to be here, we got to get above 525, 1425. 1425 would I would think resume the bullish case here, okay, in the longer term. And Friday's low will have to hold that 1342. So in between here is basically all noise and chop. I'd like to see us kind of back test that 200-day moving average and then make a higher low from this previous low here and then start to really move higher. That would get me more excited to be looking to get long stocks. I'm not going to get long stocks in here, right in this area. I'd like to see a little bit of a pullback. We might not get that for Wednesday and Friday's trading, but again, just keep in mind, looking for something, looking for a spot to buy in the market. SPY, same thing, held at 61.8%, up above the 200. As you can see here, yesterday's volume really tapered off, and we're starting to get a little bit of a move back on the RSI. Break above the 20. MACD's again starting to curl, making a little bit of higher low on a histogram. So again, good sign that we've held our rally, and now we're just looking for a little bit of a pullback and then a resumption of the trend. That would get me a little bit more bullish in the short term. Transports again holding in here, which is fine, but again we need to hold this area here. I'd like to see the transports get back above these consolidation area here. We see this heavy volume here. I'd like to see us get right above this confluence area of resistance and then start to really get going. Now it is a seasonal strength for the transports, but I have yet to see that, and that's kind of a little concerning for me. So I'd like to really see this start to really take shape here. Okay, let's take a look at IWMs. Good gauge of risk, and again, IWMs had a bigger day than the other indexes, rightfully so. Big gap up here, and then move right underneath the 200-day. Now the S&P recaptured the 200, where the Russell did not. This needs a lot more work than the S&P, and it is a leader, so really keep that in mind, guys. Okay. We're coming down on the 20. We're sloping 20-day moving average. The 200 period is starting to kind of flatline here, which is something that I want to see and start moving these averages up a little bit. But again, another big day. Maybe back test, not to fill this gap, but maybe halfway. Even 77, 80, 78, and then start to really move up a little bit. That's something that I'm looking at the Russell to really buy into. Take a look at Apple, and again, now Apple is actually due for a rest, right? The problem with this is that what I did not like is this large wick here. This is telling me that sellers stepped in big time right up in the 608, 600 area, and I mentioned that 600 is going to be very difficult for Apple to get through. And sure enough, we actually sold off pretty hard here. We're back down into this 560-ish area. So this is something that I really didn't want to see. I would rather have a small body, small wick higher, maybe didn't get above the 200-day, or better yet, even kind of sell off half of this candle here to 550, and then the next day kind of resume its trend. So there's a ton of sellers up in here, guys. And if you can see the volume profiles, I think 600, 610 is going to need a lot of work, a lot of chopping around, and really absorbing the supply well up above here. So Apple has a lot of work to do, and Apple still hasn't recaptured the 200-day moving average. Yes, we did get a little bit of a pop. Still needs a little bit more work to do on our stochastics. MACDs are starting to cross over. Very good sign. Good volume here. But I don't like this wick here. I want to see this starting to stabilize a little bit. Maybe chop around sideways consolidation would be best, and then a break higher. And again, that 610 is going to be very, very heavy resistance. So just keep that in mind if you're long. Okay, and just want to show you the weekly chart of the Qs here last but least. And I want to show you here that we're coming into the end of the week. As you know, we're off tomorrow, half a day on Thursday. If we could kind of break back above this last week's high on this candle, 63.77, and close higher, then we can have a good bullish case that we're building momentum to the upside. But again, a lot of work needs to be done to really get going to the upside, guys. Lots of work, okay? So just please keep that in mind. Again, I wouldn't, if you're looking to get short today and Friday, really, historically, is not the time to be short, unless obviously you're trading, day trading, and you're keeping your stops really tight. All right, guys, really take it really light today. Enjoy the holiday. If you have to, take the day off on Friday. I'm not working on Friday as well. There'll be no morning call on Friday. Morning call video will resume on Monday. Again, happy Thanksgiving to you and your loved ones, and we'll talk to you on Monday. And talk to you soon. Take care.